Introduction. Airbnb has exploded across America, with over 1.3 million active listings nationwide according to the most recent data. But in some states, short-term rentals aren't just a side hustle, they're fundamentally reshaping the housing market. Today, we're ranking the top 25 states where short-term rentals have the biggest footprint relative to the housing supply. The numbers might shock you. How we measured this. We looked at three key metrics: total short-term rental listings per state, the percentage of total housing units occupied by short-term rentals, and the average nightly rate. Data is drawn from AirDNA, Inside Airbnb, and US Census housing estimates, all based on the most recent available figures. States are ranked by the percentage of housing stock dedicated to short-term rentals, the truest measure of market impact. Note, all figures are approximate and may vary by source. Number 25, Oregon. Oregon kicks off our list with approximately 23,000 active short-term rental listings, representing about 1.3% of the state's total housing stock. The average nightly rate sits around $180. Portland and the Oregon coast are the biggest hotspots, with coastal towns like Cannon Beach seeing particularly high concentrations of vacation rentals. Number 24, Louisiana. Louisiana has about 24,500 short-term rental listings statewide, making up roughly 1.35% of total housing units. The average nightly rate is around $165. New Orleans alone accounts for nearly half of the state's listings, and the city has been at the center of heated debates about short-term rentals hollowing out historic neighborhoods like the French Quarter and Treme. Number 23, Utah. Utah boasts around 21,500 active short-term rental listings, representing approximately 1.4% of its housing stock. The average nightly rate comes in at about $215. The state's proximity to 5 stunning national parks drives huge demand, with towns like Moab and Springdale near Zion seeing listing densities that far exceed the state average. Number 22, Nevada. Nevada has roughly 24,000 active listings, which account for about 1.45% of the state's housing units. The average nightly rate is around $200. While Las Vegas dominates in raw numbers, the Lake Tahoe area on the Nevada side has one of the highest concentrations per capita. Short-term rental listings have surged in recent years following regulatory changes. Number 21, California. California has the largest raw number of short-term rental listings in the country at approximately 105,000, but given its massive housing stock, they represent about 1.5% of total units. The average nightly rate is a hefty $235. From Big Sur cabins to Los Angeles apartments, the Golden State's short-term rental market generates billions in annual revenue. Number 20, Georgia. Georgia is home to about 37,000 short-term rental listings, representing roughly 1.55% of its housing stock. The average nightly rate is around $170. Atlanta is the top market, but the state's mountain communities in Blue Ridge and the coastal islands like Tybee have seen explosive growth, with some small towns reporting more active listings than year-round residents. Number 19, North Carolina. North Carolina has approximately 48,000 active short-term rental listings, making up about 1.6% of its total housing units. The average nightly rate is around $190. The Outer Banks, Asheville, and the Blue Ridge Mountains are the state's short-term rental epicenters. Asheville in particular has become a flashpoint, where locals argue that vacation rentals are pricing out long-term renters. Number 18, New York. New York has around 80,000 active short-term rental listings statewide, representing about 1.65% of its housing stock. The average nightly rate is approximately $225. While New York City cracked down on most short-term rentals with strict enforcement in recent years, the Catskills, Hudson Valley, and the Hamptons have seen listings skyrocket as hosts relocated their operations outside city limits. Number 17, Arkansas. Arkansas may surprise many on this list with about 12,500 short-term rental listings representing roughly 1.7% of its housing stock. The average nightly rate is around $155. The Ozark Mountains and towns around Beaver Lake have become unlikely short-term rental hotspots. Eureka Springs, with a population of just around 2,100, has over 500 active vacation rental listings. Number 16. Arizona. Arizona has approximately 39,000 active listings, accounting for about 1.75% of its total housing units. The average nightly rate is around $210. Scottsdale and Sedona are the biggest markets, with Scottsdale alone hosting over 7,000 listings. The state has been relatively hands-off with regulation, making it attractive for short-term rental investors from across the country. Number 15. Wisconsin. Wisconsin has about 19,000 short-term rental listings, representing roughly 1.8% of total housing. The average nightly rate is around $175. The Door County Peninsula is the state's short-term rental capital, where vacation homes have long been a tradition. But the rise of online rental platforms has transformed what were once seasonal family getaways into year-round investment properties. Number 14. Colorado. Colorado has approximately 40,000 active short-term rental listings, making up about 1.85% of its housing stock. The average nightly rate is a steep $250. Ski towns like Breckenridge, Vail, and Steamboat Springs have become ground zero for the short-term rental boom, with some mountain communities reporting that over 20% of all homes are now listed as vacation rentals. Number 13. Alabama. Alabama lands at number 13 with around 19,000 listings, representing about 1.9% of its housing stock. The average nightly rate is approximately $160. The Gulf Shores and Orange Beach corridor along the coast drives the majority of demand. In Baldwin County alone, short-term rental listings have grown by over 150% in the past 5 years, dramatically changing the local rental landscape. Number 12. Michigan. Michigan has roughly 33,000 active short-term rental listings statewide, accounting for about 1.95% of its housing units. The average nightly rate is around $185. Northern Michigan's Traverse City region and the Lake Michigan shoreline are prime territory for short-term rentals. Local officials in some resort communities have warned that the vacation rental boom is creating a workforce housing crisis. Number 11. Texas. Texas has a staggering 85,000 short-term rental listings, the second highest raw total in the nation, representing about 2.0% of its housing stock. The average nightly rate is around $195. Austin, San Antonio, and the Hill Country dominate the market. Austin alone has over 12,000 active listings, and the city has been wrestling with regulation for years. Number 10. South Carolina. South Carolina cracks the top 10 with approximately 34,000 active listings, representing about 2.2% of its housing stock. The average nightly rate is around $205. Charleston, Myrtle Beach, and Hilton Head Island are the driving forces. In some Hilton Head neighborhoods, short-term rentals outnumber permanent residents, fundamentally changing the character of these communities. Number 9. Maine. Maine has about 20,000 active short-term rental listings, but with a smaller housing stock that represents roughly 2.4% of all housing units. The average nightly rate is around $215. Coastal towns from Portland to Bar Harbor are saturated with short-term rentals. Portland has passed strict regulations in recent years, but many argue enforcement hasn't kept up with the growth. Number 8. Tennessee. Tennessee is home to approximately 41,000 short-term rental listings, representing about 2.5% of the state's housing stock. The average nightly rate is around $195. Nashville and the Great Smoky Mountains are the two major markets. In Sevier County, which includes Gatlinburg and Pigeon Forge, there are more short-term rental listings than occupied households, a truly remarkable statistic. Number 7. Florida. Florida has the third highest raw number of listings at approximately 100,000, representing about 2.7% of its housing stock. The average nightly rate is around $220. From Miami Beach to the Florida Keys to Orlando, the Sunshine State is a short-term rental empire. In some South Beach zip codes, nearly 15% of all residential units are listed on vacation rental platforms. Number 6. Rhode Island. Tiny Rhode Island punches well above its weight with about 5,300 short-term rental listings representing approximately 2.9% of its housing stock. The average nightly rate is around $245. Newport and the coastal communities along Narragansett Bay are the epicenter. In Newport alone, short-term rentals have become such a contentious issue that the city has imposed seasonal restrictions and licensing requirements. Number 5. Montana. Montana ranks 5th with approximately 14,500 active short-term rental listings, representing about 3.1% of the state's housing stock. The average nightly rate is around $240. The gateway communities to Glacier and Yellowstone National Parks have been transformed by short-term rentals. In Whitefish and Big Sky, housing prices have soared, and many workers who keep these resort towns running can no longer afford to live there. Number 4. Vermont. Vermont has about 11,000 active short-term rental listings, which represent roughly 3.3% of the state's total housing stock, one of the highest ratios in the country. The average nightly rate is around $230. Ski areas like Stowe and Killington and the charming towns throughout the state have made Vermont a vacation rental magnet. The state legislature has been actively debating a statewide short-term rental registry. Number 3. Wyoming. Wyoming takes the number 3 spot with approximately 9,000 active short-term rental listings, modest in raw numbers but representing a remarkable 4.2% of the state's total housing stock. The average nightly rate is around $265. The towns surrounding Yellowstone and Grand Teton National Parks are completely saturated. In Teton County, home to Jackson Hole, short-term rentals have contributed to a median home price exceeding $2.5 million. Number 2. Hawaii. Hawaii comes in at number 2 with approximately 29,000 active short-term rental listings, representing a stunning 4.6% of the state's housing stock. The average nightly rate is an eye-watering $300. On Maui, vacation rental listings account for nearly 7% of all housing. Hawaii has some of the strictest short-term rental regulations in the country, yet enforcement remains a challenge across all 4 major islands. Honorable mention. Washington, D.C. Before we reveal number 1, an honorable mention goes to Washington, D.C. While not a state, the district has roughly 7,200 short-term rental listings representing about 2.3% of its housing units. The average nightly rate is around $180. D.C. passed strict regulations requiring hosts to live on the property, which cut illegal listings significantly, but the market has since adapted and continued growing. And the number 1 state is, so which state tops the list? When we combine all factors, percentage of housing stock, growth rate, and community impact, one state stands clearly above the rest. The numbers are staggering, and the effects on local communities have been impossible to ignore. Let's reveal the number 1 state where short-term rentals have taken over the housing market. Number 1. Hawaii, a closer look. When all factors are combined, percentage of housing stock at 4.6%, a still growing listing count, the highest nightly rates in the nation, and devastating community impact, Hawaii earns the number 1 spot. With only about 560,000 total housing units statewide, every new short-term rental listing hits harder than almost anywhere else. The state's housing crisis is directly fueled by short-term rental conversions, with native Hawaiian families being pushed out of communities their families have lived in for generations. the workforce housing crisis. Across these top-ranked states, a common theme emerges: workers can't afford to live where they work. In ski towns, beach communities, and national park gateways, short-term rental conversions have slashed the supply of long-term rentals. In some areas, rents have increased by 30 to 50% in just a few years. Teachers, firefighters, and restaurant workers are being pushed hours away from their jobs. The regulation battle. States and cities are fighting back with a patchwork of regulations. Hawaii has cracked down with fines up to $25,000 per violation. New York City essentially banned most short-term rentals through strict registration requirements. Meanwhile, states like Arizona and Texas have preempted local regulation, tying the hands of cities trying to address the problem. The regulatory landscape remains a chaotic battleground. The economic argument. Supporters of short-term rentals argue the economic benefits are undeniable. Industry estimates suggest that hosts and guests generate over $34 billion in economic activity across the U.S. annually. In tourism-dependent states, short-term rentals support local restaurants, shops, and attractions. Many hosts are middle-class families using rental income to afford their own mortgages. The investor takeover. However, data shows that individual hosts are being eclipsed by professional investors. Approximately 35% of all short-term rental listings nationwide are now managed by hosts with 3 or more properties. In states like Florida and Tennessee, that figure climbs above 45%. Large investment firms and private equity have entered the market, purchasing homes in bulk to convert into short-term rentals. The revenue reality check. Interestingly, the short-term rental gold rush may be cooling. Average occupancy rates have dropped significantly from their pandemic peaks as supply has outpaced demand. Many new hosts who bought properties specifically for short-term rentals are now struggling to cover their mortgage payments. In some oversaturated markets, nightly rates have fallen by 20% or more from their highs. States fighting back with success stories. Some states are finding a middle ground. Montana's Whitefish passed a 4% tax on short-term rentals dedicated to affordable housing. Colorado's mountain towns have created workforce housing funds financed by vacation rental fees. Hawaii's Maui County has made significant cuts to illegal vacation rentals through aggressive enforcement. These approaches show that smart regulation can work without killing the tourism economy. The national picture. Zooming out, there are now an estimated 1.3 million active short-term rental listings across the United States, representing roughly 0.9% of the nation's approximately 145 million housing units. The short-term rental industry is valued at approximately $65 billion annually. While the national percentage seems small, the impact is hyper-concentrated in tourism-dependent communities where the effects are impossible to ignore. What is next for short-term rentals and housing? Looking ahead, experts predict the short-term rental landscape will continue evolving. More states are likely to pass comprehensive regulations, and major platforms have been working with local governments on data-sharing agreements. The key question remains: can America balance the economic benefits of short-term rentals with the fundamental need for affordable, available housing? Conclusion. From Hawaii's beaches to Vermont's mountains to Florida's coastline, short-term rentals are reshaping the American housing market in ways we're only beginning to understand. Whether you see vacation rentals as economic engines or housing destroyers, one thing is clear: this issue isn't going away anytime soon. Thanks for watching. Drop a comment with your state and tell us how short-term rentals have affected your community. And if you found this video valuable, make sure to like and subscribe.